I've seen people make huge amounts of money by renovating, and it got me thinking, is this a good way to get into my first home? Buy for less and sell for more? Chances are you've thought the same thing. Today I'm here with my dad, who's going to take us through some tips and tricks and how to renovate your first home as a first home buyer and the reality behind it. So Dad, where do we start with all this? I know you always like to add value to property or even just land. Could you explain a little bit about that?
I like the way you're thinking, Nicola, because adding value to properties is what I've done pretty much all my developing life. I've bought blocks of land, old houses, knocked them down, built 3, built 4, and added value to that property and then sold them and made money. But what you're doing is thinking about it at that single house level where you can buy an older house, renovate it, add value to it and build your equity. And whether you decide to keep that house or sell it, there are benefits there for you. So let's just run through a scenario and let's just see where we end up. So let's just say you were to buy your first house, let's say $700,000. You were to spend, call it $50,000 to $100,000 renovating it.
So something that isn't cosmetically appealing.
Correct. You got to look past how bad a house looks and look at the structure of the house and look at how you think you can improve it.
And also the land surrounding it.
And the land as well. The land is the important part of the valuation as well, yeah. So let's just say you saw an old house, old kitchen, old floors, for example, might have carpet throughout, might have a few cracks in the house, bad paint job and crappy bathrooms. You see that house, you see the character of the house might be good and the bones of the house might be good and it might be on a good block of land, but you can't see yourself living in it as it is. But what you can see is the future renovation potential of this. For example, rip up the carpet, polish floorboards, paint the house, new kitchen, and bathroom. These are things you don't have to do all together as well at the same time. So you can progressively add value to the property over a 2-year period. The benefit is at the end of it, you're going to have a property that's worth more than what you paid for it because you've added value to it. So let's just say $700,000 purchase, $100,000 worth of renovations, that's $800,000. That house might be worth $1 million in 2-3 years time because first of all, with capital growth, but with improving the look of that house and the style of that house. There's a lot of people that would just love to buy a house that's been renovated and ready to move into.
Yeah, but you also got to consider the location as well. Is that correct?
Definitely, location is important as well because you want to look at an area where there is going to be capital growth. So does that make sense, Nicola, how you can buy a property and add value to it?
Yeah, that makes sense. I'm just a bit worried. Do I have to do the renovations myself or can someone else do them for me? Because as a first home buyer, I'm already limited on my borrowing capacity, limited with my deposit, obviously. So who's actually going to do the renovations?
So that's an important part of it. So you need to know what your capacity is before you go into one of these projects.
Yeah.
So you need to understand, you might need to keep some money aside to be able to pay for the renovations or knowing that you can save that up and then progressively renovate it because a bank won't lend you money for renovations. If you've borrowed the maximum amount possible on that property, the bank then won't lend you money for the renovations later on unless that value increases. So normally what I say to people is borrow the maximum amount possible you can for the purchase with the lowest deposit. What that means is if you have to pay mortgage insurance to get the property, but then you've got money aside to be able to do the renovations, it's worth going that way because you've got to pay for your renovations normally with cash.
So what if you borrow as much as you can borrow, say $1 million, and then the purchase price of the property is only $700,000 or $800,000? Can you use the remainder of the...
No, because the bank's not going to lend you more than what the property's worth.
Oh, okay. So they're only going to lend you as
But
much as
there
the
are
property.
ways around that.
Although, you could borrow up to $1 million.
Your borrowing capacity might be up to $1 million, yes, based on your income, but you
But
might
the
be
bank
limited
will only
by...
allow you to borrow up to the property value.
Correct, yeah. And normally the maximum possible ever is 95% against that property value. So it really depends what your situation is and how much you can borrow against that property.
So, but you actually said that there were certain ways I might be able to do that?
There is where you don't have to use some of your deposit. So we've talked about parental guarantees before. So you might be able to, your borrowing capacity might be good and you might have money to go towards the purchase. But what you might want to do is keep that money aside, purchase that property with a guarantee from your parents and then use that money you've got to renovate the property. By then doing that, you're adding value to that property, you're renovating it with your own cash, you can get it revalued and potentially in 2, 3, 4 years' time, it would have gone up in value and then you can remove that guarantee in the future. So if you're in a position where your parents can provide a parental guarantee, borrow the full amount, don't use your deposit for doing the renovations. And these are more for minor renovations, not for extensions and those type of things. The way of doing that is again different, which
then you'll have to borrow for that as well.
Yeah, so we're talking about minor renovations being cosmetic, floorboards, kitchen, bathrooms, and paint, for example.
And as a first home buyer, you're not going to have much experience in that area. So obviously you're not going to go do a massive extension, plus you can't afford it.
Potentially, yeah. But it's not that hard to renovate a house. Do your research, reach out to your contacts with potential trades that can help you do the work as you could do. Get several quotes and know your budgets and be able to coordinate it yourself. So
would that mean you doing that renovation for me?
have you seen my toolbox?
No, you don't have one.
Exactly. So I won't be helping you.
So because you can't borrow the renovation cost, using your parents as a guarantor might be a good opportunity.
Definitely.
But what if you don't have that available to you?
So that's where you've got to sit with your finance broker to work out what's the maximum you can borrow and what's the minimum deposit you need to contribute towards that house.
Your leftover deposit can
Then be used for the
contribute to your
renovations.
renovation.
Yeah. And you might start off with just on the kitchen, and you might wait a year, get it revalued to be able to get some extra cash out, and then do the bathrooms. So it doesn't have to be done all at the same time, but as long as you've got the end goal in your head of what you can do and how you can add value to it. And it's all about sacrificing. Like we've said in previous episodes, you've got to be prepared to live in something that isn't your ideal house, but it's making that sacrifice
that might get you somewhere further
to meet your own goals. And the other benefit of renovating your own occupied property too is there are people that buy properties, renovate them, they live in them for 2 years, then
And
they sell them, and they make money along the way. And the benefit of that is you're not paying any tax on that gain that you've actually benefited from. So on that situation of 700 grand purchase, 100 grand renovation, sell it for $1 million, you potentially could make $100,000 or $200,000 from that gain, but you're not paying without paying any tax.
So I know a few, like my cousins have done that previously to a couple houses, and they're not paying tax on the gains they make.
Correct, yeah, because they've actually lived in that property. So you don't pay at the moment. The tax law is that you don't pay any capital gains tax on the house that you're living in, and that's probably a way you can build your equity up slowly and do that 3-4 times over, say, 10-year period by adding value to that property. You're making money along the way, and you're getting into better properties. The other way to think about it as well is trying to get into a location where you want to live. So you might not be able to buy the ideal house that you want to live in the suburb where you want to live, but you might be able to buy a rundown house in the suburb you want to live that you see the potential in what you can do to renovate that property. So that's the benefit of buying cheaper, a rundown house. You can actually get into the area where you see yourself living in the future, and again making that sacrifice.
And then do a progressive renovation.
Correct.
Rather than straight
and
away.
then as things change, jobs change, your
income will change.
Yeah, your income will change, property values go up, you can then borrow against it to do renovation. So there's ways that you can do it, but as long as you've got that plan in place and your end goal in place and knowing how you can get there.
This has been awesome, and renovating as a first home buyer is always something I've wanted to do. But my biggest takeaway would be, and something I did not know, is that you can actually grow your property portfolio and your equity gains by flipping and renovating a house, but also having to live in it. Is that correct?
You do. So you do have to live in the property to avoid paying capital gains tax.
So although I might not be able to borrow as much at the beginning when I buy my first home, then with the intent of renovating it, if I wait a couple of years, the property value will go up, and then also income will change and interest rates will change and things. Will that lead to me being able to do maybe a bigger extension and not focusing so much on the cosmetics, but developing the whole house overall?
And doing like an extension on the back of the house, for example.
Yeah.
Is what you mean? Yeah. There's two ways of adding value to a property: doing minor renovations or doing significant renovations with an extension. So you normally have to use your own cash to be able to pay for your minor renovations.
But with bigger renovations, that's when you can get a loan.
So we'll go through the scenario of doing an extension on a property. So if you were to do an extension on a property, get a council approval, and let's just say it's going to cost you $300,000 to do that extension. The bank will fund against the end value of that property with that extension. So let's just say you bought a house for $700,000, you got plans done and a building contract done for a $300,000 extension. Theoretically, that house is worth $1 million, but it'll probably be worth more. The bank would lend you against that end value being, say, $1 million. So you would be able to borrow against that value rather than the $700,000 purchase price, because your bank can see what this property is going to be worth at the end.
Yeah.
Because you're doing a significant renovation with a building contract, and the valuer can then see what you're actually doing there. And banks refer to that as an as-complete valuation. So as complete basically means when that property is finished, it's going to be worth
This
X.
much.
Yeah.
Yeah.
So that's how you can do an extension, as long as your borrowing capacity is there to be able to support that loan. So one final note, Nicola, when looking at buying an older house, you have to make sure that house is still habitable. So it has to be able to be lived in as it is.
Yeah.
Which means a bathroom, kitchen,
And a bedroom.
and a bedroom, because without that, a bank won't lend against it. The bank's requirement is that that house needs to be habitable. So if the property can't be lived in, it's very hard to get finance against that property.
That's a really good takeaway, Dad. I didn't know that. So you need to make sure you can live in the property and make sure it doesn't need too much work, because otherwise the bank won't finance you.
Correct.
And then another takeaway would be that you don't need to actually pay tax on any capital gains you make.
Correct, yeah.
And also making
When you sell
sure
it.
you're in a good location still.
Yes, but you have to live in the property to avoid capital gains.
And that would all depend on the time period and the intent of your purchase.
Correct.
And then my third takeaway would be the location you're actually wanting to buy the house in, making sure that it's still a good location to ensure that you actually definitely get the capital gains.
Yep, as we know, location is important when we buy.
I hope you guys have enjoyed this episode. If you're thinking about renovating, make sure your house is habitable, you're getting into a good location, and you're living in your house for at least 6 months, but talk to your accountant. And if you lived in it and you did end up selling it, and you should avoid capital gains tax. My name is Nicola Kefalianos, and we'll see you on the next episode.